Hi guys, it's Thomas here from COTBASE.com. In today's special video, I'm going to be talking about combining fundamental and technical analysis. You might be wondering where's the next COT review. Well, I'm actually traveling right now. I'm out of the country for the next 3 weeks, so I won't be able to do the usual weekly review format. But I wanted to leave some interesting educational materials for you. And I hope you like it. If you do, by the way, I wouldn't mind if you hit that like button, and if you have not yet subscribed to this channel, then that's something you might want to consider. If you're absolutely new to the commitments of traders, data, and analysis, this video is interesting. I think it's a must for you to watch, but we do have educational material on the website under on COT. We offer a couple of resources, recommend books, links. We have some very useful videos that guide you through the analysis process step by step. We do offer consultations as well if you're interested in anything specific. So what I'm going to do is I'm going to do a step-by-step explanation on how we actually do commitments of traders analysis. And if you have any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. So what I'm going to do first, I'm going to choose grains as the only market category that I'd like to look at. I'm going to order markets based on the largest change in large speculators, the largest COT extreme and large speculators net positions. And we're going to use soybean meal as a very classical commodity, and where COT analysis is actually very, very efficient, to explain what this combination of fundamental and technical information is really going to produce. So let's start with the fundamental, the commitments of traders data. As you may know by now, what the COT data does is it breaks down open interest. When it's the classic COT report type, then it's into 3 trader categories. We've got commercials, we've got large speculators, and then we have non-reportables, as CFTC calls them, whereas we call them small speculators. They simply do not reach those large quantities, large volumes to need to report to CFTC, thus they fall into the non-reportable category. They tend to correlate with large speculators. Now again, this is data on the futures markets, so one has to understand what futures markets are. So what I'm going to do, I'm going to open soybean meal. I'm actually going to take down large speculators and talk about commercials, because the reason we have futures markets really dates back to the 18th, 19th century, when people realized that it would be very, very useful to lock in those future prices for our own business. If you are a soybean meal producer, and let's say you see the price rising and you are making a decent profit at these levels, but you can't harvest just yet. So what you can do is you can actually sell a futures contract in the future, right? It has an expiry date, it may be 3 months away. And by doing that, you lock in that profit. It means you are safe, you are making money. So that is the reason why when commercials are, when the market is high, commercials tend to sell into those price movements, okay? So again, we have a contract, a commercial. Let's say I'm a producer of soybean meal and I'm seeing the price at these levels, and I'm like, that makes sense. It's a decent profit. I'm going to sell. I'm going to hedge. This is called hedging. I'm going to hedge against the risk of falling prices. I want to make a profit. So I'm going to go to the futures markets and I'm going to sell. Now there has to be, otherwise there's no open interest. If I'm a seller, there has to be a buyer. And if I find a buyer, let's say I want to sell 1 contract of soybean meal, and there's somebody out there who's willing to take that risk because he believes soybean meal is going to continue its rise, right? If he believes, then he's going to buy that contract. And right away, a contract was created. That is called open interest, okay? So you might not know about the commitments of traders data, but I'm sure you've heard about volume and open interest. So open interest really shows the open interest in the market. how interested traders are in that specific market. If open interest is high, that means that there's excitement, there's stress in the market. Now, what the COT report does is it breaks down open interest. It breaks it down into to commercials, large speculators, and small speculators. So we understand what the different trader category is doing. So commercials are there to hedge against their normal business risks. The speculators, let it be large or small, they're usually there to speculate on the market. So for instance, here you can see that the price was coming down, and as the price is coming down, commercials are less eager to short, right? It's the price is not as favorable anymore. And there comes a point when the market bottoms, and these bottoms are actually very well signaled by the COT report, as you can see multiple examples out there, right? So large speculators are probably going to bet on the other side. So right over here you can see that as the market starts going higher, large speculators are buying into it. Now, if we come over here, we can actually look and see how we get to those charts. So those red, green, and blue charts, the net positions of traders, how is it calculated, okay? Now, what I'm gonna do, I'm gonna take my calculator over here, and sorry, this is soybeans, and I wanted to look at soybean meal. We were talking about soybean meal. There we go. So we have total open interest, 661,628, but non-spreading open interest is 471,809. Now, what is spreading? Spreading means that large speculators are holding both long and short positions at the same time. They could be different delivery month, or different but related commodities. So that's a special, unique part. But you'll see how we get to that. So what we are going to do is we are going to add commercials long. So that's 333,051 contracts. We are going to add 81,681 long from large speculators. And there's 57,077 contracts from small speculators. And we arrive at 471,809 contracts. That's the total non-spreading. So non-spreading means these large speculators who have both long and short contracts are not calculated. If we were to add them to this number, okay, then we actually arrive at the total open interest, 661,628. I probably made an error over there. My apologies. But we can do that math real quick again. So 333,051 plus 81,681 plus 57,077. So that gives us the non-spreading. And if we add the spreading, then there we go. So the math is correct. 661,628 contracts total open interest. Now, we have commercials who are long. We have commercials who are short. We have large speculators who are long and large speculators who are short. We have non-reportables long and short. But we want to see the net. That's the interesting part. So what we do is we subtract the shorts from the longs. You can see that gives us commercials 55,671 contracts net short. So if we come back over here, you can actually see that value over there, okay, at the very end. So I just want you to understand how we get to these charts. The reason this is fundamental information is that it is not derived from price. It is a unique, separate information. It's open interest. It's showing you what traders are doing, really. And that gives its immense power. Anything that is derived from price, an RSI, an exponential moving average, and we can go on and on, that is all derived from price. So if you would like to, and I would assume that most of you who are watching are probably, the majority of you are in the camp of technical traders, users of technical indicators, let's put it that way. But by combining a little bit of fundamental information, which I believe is the most crucial information out there, what are the traders doing? Because it doesn't matter what the news is. What really matters is who's influencing the market, and it's the traders who are there, who are buying and selling these soybean meal contracts. And you can see the power. You can see we have a bullish COT extreme over here, just coinciding at the bottom of this chart. Then once the market moves up, we get a bearish COT extreme territory. The market starts to come down. We get a bullish COT extreme. The market goes up. We get a bearish COT extreme, and this goes on and on and on and on. Okay, so I would say that what we've done at COTBASE.com is we've took the raw data from CFTC, the Commodity Futures Trading Commission that compiles this data, and represented on a chart. And that's very, very useful. Now, when we talk about an all-time COT extreme, what that means that in the history of COT data on soybean meal, we are talking about large speculators here, but commercials are at an extreme as well. It means that never in the history of COT data on large speculators, and if we take commercials off, it becomes more clear, we have never seen such an extreme. And you can see these extremes in the past, how well they coincided with a bottom in the market, right? It's very, very accurate on soybean markets, I would say. So it suggests that soybean meal futures should rise. Now, when we shift towards technical indicators, this is the beauty of our own unique indicator, the iCOT Intraday Indicator. This is a 1-hour candlestick chart on soybean meal. Okay, so we've got, I'm going to take off everything. So we have, this is soybean meal futures. And if you add the scores and you add the signals, this is what you get. Just by default, you see I didn't change any settings. You can see how accurately this can pinpoint. This is an hourly chart. Okay, we can go out if you want, if you're more of a swing trader, a 4-hour candlestick chart, and you can see the power of this tool. Now, this again is something that has very significant fundamental components, but at the same time, it also combines very popular technical indicators as well. There's a great video out there explaining to you how we arrived to this indicator. Please watch that one. It's in the description below, and you will find information on really the depth of these scores lines. It seems like a very simple line, but there's multiple layers to it. Very, very deep information. And you can see that when we have a bullish COT extreme, an iCOT extreme, let's call it, because this is not the COT data that we were just looking at on COTBASE.com. But you can definitely see the correlation between these stresses in the market and you can see the reaction to those signals. This is a tool developed for intraday indicator, as an intraday indicator. So you can actually use this on lower time frame charts as well. But combining the two worlds, so fundamental information, knowing what traders are doing, with some technical tools to really identify the best buy and sell times is, I believe, the way to go. So this is all for this special video that I wanted to prepare. I hope you enjoyed it. If you have any questions, feel free to comment underneath the video or send us an email to info@COTBASE.com. We're happy to help you. Commitment to Traders Analysis is an amazing tool to have in your pocket, in your trading system. Using the iCOT Intraday Indicator can actually help you identify the best time to enter the market and, of course, also exit that market. Thank you very much for your attention. I hope to see you in my next video. As I said, I'll be out for a little while, but I'm still available. If you have any questions, feel free to comment or send us an email. Thank you for your attention. Take care. Goodbye.